upcoming week. It's indeed going to be an earnings-heavy week because we will be watching out for many Nifty 50 earnings, especially from the sectors like banking, autos, as well as pharma majors will be in focus. And talking about the upcoming week, the big question is there any rebound expected or not? What from the global macros you need to be watching out for? So let's try find an answer to that, and with this let me welcome on board two of our very special guests. Firstly, onto the technical side, we are being joined by Rajesh Palviya from Securities, and on to the fundamental side, Sudip Bandyopadhyay is joining us as well. Thank you so much for your time, gentlemen. And Rajesh, coming to you for the levels on Nifty 50 as well as Bank Nifty, because the weakness continues. But going ahead, which are some of the key support and resistance level that one needs to be watching out for?
Yeah, good afternoon, Srasti. So throughout the week, we have seen supply pressure for Nifty and almost 1% cut for the week. But call writers were aggressive at 19,600, 700, even 800 strike. So these are all area where Nifty is going to face the resistance or supply pressure in the coming trading session. The critical level for the Nifty is almost, we are almost close near to the critical level of 19,500. If at all Nifty slips below to 19,500, then we may see further more follow-up selling towards 19,400, 19,350 level. That's the next major put concentration area where we may see Nifty to slip further if we breaks below 19,500 in coming week. So 19,500 is very critical level for the coming trading session. On the Bank Nifty, we have seen some bit of buying interest in the banking stocks, as well as Bank Nifty is trying to hold 43,500 level. Even if we look at the option chain data for Bank Nifty, the major call concentration is still at 44,000 level. So until the Bank Nifty not crosses those level, supply pressure is going to remain around those level. Once we crosses 44,000, then there would be some short covering action we can see in coming trading session. But on the downside, 43,500 is the immediate and key support area. If he breaks those level, then possibly for the more supply we can see towards 43,200 level on the downside. As we are in earnings season, so a lot of reactions we have witnessed on the stocks front to the earnings outcome. So I think again it's going to be volatile week going forward. And I think geopolitical tensions, global cues are also not in the favor of market. So I think we may see some bit of supply pressure for any kind of minor pullbacks in the coming week also.
Okay, so pullbacks expected and many data to be watched out for when it comes to the macros. But Sudeep, hi, thank you so much for your time, and just wanted to understand from you that from the earnings, which sector that you are looking out for, because for the upcoming week we will be having major banks as well as pharma majors will be reporting their numbers like Dr. Reddy's as well as Cipla. And I wanted your take specifically on pharma because that particular index did show some resilience in the week gone by. And last quarter itself, we actually sort of see a bit of a re-rating for these names because the US markets were supportive. There were positive cues coming in as well as domestic market did flare well. So this time as well, are you expecting similar kind of a result announcement from these pharma majors? And will you be a buyer of pharma at this point in time?
Well, I think we have to understand, Srishti, that we are in the midst of a global turmoil. As Rajesh also mentioned, that geopolitical stress and tension is creating a risk aversion worldwide. On top of it, because to an extent, because of geopolitical stress, the oil prices have moved up, which isn't good for Indian capital markets, definitely. And we have US yields, which are at record highs. Again, this doesn't augur well for Indian capital markets. So under the circumstances, we've been seeing a lot of selling pressure coming in Indian markets, and FIIs have been continuously selling. It's just that we have a strong domestic investor sentiment, and about $2 billion per month is the incremental SIP, which I think to an extent is ensuring that markets are not really crashing. There is a certain level, buying is coming at lower levels in select counters. Yes, mid cap and small cap is suffering, but in large cap, I think selective buying is even now happening on regular intervals. Now, under the circumstances, when there is a bit of a risk aversion, uncertainty, obviously, stocks which are presumed to be defensive. Now, I use the word presumed because I'm not sure whether they should be considered defensive. So, presumed defensive sectors like FMCG, pharma will and are gaining importance. And we've been seeing pharma buying happening in select pharma counters. Also, as you rightly said, US price competition, of course, it is still there, but probably there is initial signs of it kind of stabilizing, and that should be very good news for Indian pharma companies, particularly large Indian pharma companies, which have US as a dominant market. The other part of pharma which we like particularly is the domestic pharma. I think about 25% CAGR can be expected for the next few years. And under the circumstances, companies which have significant domestic business are definitely going to benefit. So, maybe buying in pharma, selectively buying in pharma should be, the objective of investors who are building long-term portfolio. We do like companies like, Mankind Pharma, which has got almost 95-98% of the business from domestic market. We do like, Torrent Pharma. We do like Laurus Lab. They just came out with results. There is margin pressure. Margin improvement has happened on quarter-on-quarter basis. The top line and others may not be as per what we were expecting, but the margin improvement is definitely a positive sign. So it has corrected significantly. So maybe these are some of the stocks which can be looked at from an investor's point of view in the pharma sector.
Right. Thank you for that, Sudip. So selective buying in pharma space, that's the advice coming in from Sudip. Good afternoon, Sudip, as well as Rajesh. Rajesh, coming over to you, the gold prices that is at a 3-month high, and it also saw a second week of gains. What is the outlook on gold as well as crude? That has been volatile, but it's still inching higher away. So what's the outlook on these two commodities as well as the crude prices?
So due to safe haven buying, due to this geopolitical tensions, gold prices have surged very sharply in last couple of trading sessions, and almost now we are trading near to $2,000 mark for crude for gold. I think the trend is likely to be remain on the bullish side only, as we are seeing that the gold is now comfortably holding above $1980. So till we are holding above $1980, then possibly this gold can continue furthermore upside towards 2030, 2040 kind of level on the higher side. On the MCX, the immediate supply zone or immediate resistance zone for the gold is at around 61,000 now. If at all gold not manages to cross those levels, some profit taking could be there around those levels, but still we believe that looking at the weekly daily setup for gold, we expect that gold is probably going to give breakout above 61,000, and then this rally can extend towards 61,500 to 61,800 also in the continuation of this uptrend. So trailing stop loss on the higher side should be the strategy at this moment, and stop loss for gold on the buying side should be around 60,300 and hold your long position. Crude manages to give breakout of its last few weeks consolidation, and looking at the crude oil prices now, if crude manages to hold above $90, then we may see Brent crude to move further higher towards the previous swing high of $97, $98. That is the immediate supply zone for the crude, but looking at the weekly chart, we expect that maybe in near future we can see a breakout above $98, and then crude can scale up to the level of 105 also. So crude is looking bullish on the near term as well as on the short term chart also. $90 is the important level on the downside. Till we are holding those levels, possibly we can see a level of 98 to 105.
That's the outlook and the levels to watch out for when it comes to the crude and gold prices. But with this, viewers, it's time to step into a very short break. Don't go anywhere. We'll be right back.
Welcome back to the show, and we have on our panel Mr. Sudip as well as Rajesh to decipher how to go ahead with the market going forward next week. So, Sudip, my question goes to you. FII has been on a selling spree since August, September. It has seen an outflow of around 30,000 crore. So, even mid cap as well as small cap, they are seeing some pressure. So, what's your outlook on the mid cap as well as small cap? Are you seeing some opportunities over there, and even the outlook on the FII sell-off?
Well, I think, Lisa, as far as FIIs are concerned, there is a definitely risk-off mode. And that, of course, for valid reason. US yields are around 5%. There is oil prices going up. Geopolitical tension is really immense at this stage. So obviously there is risk aversion. And as you guys were talking about, gold prices are also going up, which is a safe haven. So under the circumstances, we have seen about $4 billion worth of selling by FIIs over the last couple of months. And I think that selling will continue. And we can't run away from the fact that till the time this geopolitical stress and US yields cool off, there will be a pressure from FIIs in terms of selling. Under the circumstances, there will be opportunities also arising in multiple pockets in India. Fundamentally, nothing has changed in India, and fundamentally, as long as oil prices don't remain above $90 per barrel for a considerable period of time, Indian economy and Indian market should do well. Apart from short-term, pressures and challenges which we are currently having. So some mid caps, particularly mid caps where the valuation are still reasonable and there are enough and more growth opportunities, should be looked at. We believe that a few pockets, a few sectors where mid caps can be looked at. One is cement. I think there is a significant margin improvement opportunity because of cooling off in raw material prices. So mid-cap cement companies definitely can be looked at because of improving performance, as well as probably forthcoming M&A opportunities. We know there is major consolidation going on in the industry, and that gives a significant opportunity and maybe one-time opportunity in multiple mid-cap cement companies. So those can be looked at. The second sector which we believe can be looked at is construction, infrastructure, and building materials. Now, this is one sector where there is a lot of action, with the election, state election and central election coming. A lot of public money is also being spent on construction and infrastructure. Under the circumstances, companies in the pipe, wares, paints, building materials definitely can be looked at. So to specifically give some names of the companies we are talking about, I would say look at Welspun Corp, look at companies like Greenply, look at in the cement sector, look at companies like Birla Corp, look at Heidelberg Cement. So I think one has to be selective in picking up shares in the mid-cap universe, but there are opportunities, and definitely those opportunities are worth looking at.
Sudeep, thank you so much for sharing your top recommendations at this point in time from the mid and the small cap segment. But Rajesh, coming to you, help us with your top stock ideas as well.
So, Srishti, first stock is from Telecom, that is Bharti Airtel. Next week, we are going to have a monthly expiry, and throughout the series, we have seen outperformance from the Bharti Airtel. And at the end of this series, stock is still showing good strength. Weekly, monthly setup is looking positive, long built up setup for the series. We believe that towards the end of this series, Bharti Airtel may continue furthermore upside, and possibly stock can scale up to the level of 970. So one can buy Bharti Airtel with stop loss of 930. The second stock that we like is MTAR Tech. If you look at the daily as well as the weekly setup, stock managed to give breakout of its last 10-15 days consolidation range. Stock is comfortably holding above 20-day, 50-day moving average. So near-term, long-term setup is looking bullish. MTAR Tech is looking bullish, and we expect that this stock can continue furthermore upside towards 28.30. One can buy with stop loss of 27.10. And the third stock is MCX. On the daily as well as on the weekly chart, rounding bottom formation breakout is there with the volume action. Very strong buying throughout the week. Looking at the overall structure for MCX, we expect this rally can extend further, and 2410, 2440 could be the possible target on the higher side. So one can buy MCX with stop loss of 2260.
Well, thank you, Rajesh, for those picks, and thank you both Sudip as well as Rajesh for sharing your outlook on the market ahead and for your time on the show. But moving on, the earnings next week, Ashesha is here.